So welcome. We're gonna start shortly. Alright, hello. Today's session will be regards the multi-time frame key level indicator. So any question regards the tool, settings, applications, so on, feel free to ask them in the chat. So we're gonna utilize the Monday's live Q&As, basically covering certain strategies, indicators we are applying in the AUTOMA and have some little breakdown regards them. So today we're gonna cover regards the multi-time frame key level. So what's the multi-time frame key level? So basically the tool which gives you ability to see from 15 minutes down to yearly all high time frame, low time frame levels, key levels, under key levels. For us specifically for this tool, it's classified as the previous range high, previous range low, previous range 50%, current range open price, the current developing mid price. If we create peak formations, sweeping basically previous range, it's gonna establish and show us as the colored shadowed box, basically highlights the peak formation. Then so basically if you go in this setting, this pretty much will be breakdown regards every single setting, what the applications it's used, and how it's been, what's the meaning for everything, what's the color code, and so on. So as you can see, this first column shows that all the time frames you can enable, disable every single one whenever you click. High low, that indicates the high low labels like low day, high day. So let's say if I want to see, let's say daily, and I would like to see example monthly, so if disable everything, I just put monthly high low, so it will give me the indication as well where is the monthlies, low the month, high the month. So it gives you the indications of that. Let's say weeklies, high low. Actually I can untick everything, so just go one by one. So, and I will go 1 hour time frame, so it's easier to see. Alright, something like that. So you can see it's stacks the labels up, hide the range. So basically it's high low, it's hide the range, low the range. We choose the time frame. Okay, I want to see hide the range, low the range for monthly, weekly, daily. So it instantly plots the labels wherever is that, current months high low, current weeks high low, current days high low. Indications, the arrows you see next to it, it's either trend continuation or trend reversal range. What's the mean trend continuation? So obviously if we have as you can see, this says weekly and shows arrow like this, that means the current weekly candle is higher than previous. That means we have a higher high low. If this is current weeks, previous weeks, okay, that's the previous week's low, that's current week's low. So obviously it shows trend continuation, so it shows this range low is higher than previous. As you can see, this monthly high was the lower, this monthly high is the lower than previous, so it means we are respecting previous month's high. Arrow like this, which is reversal, means this month's low is the lower wherever is the previous month's low, right? So that means this could be from this moment of the low of the month, it could be reversal to go what? Back in previous range row for reclaiming, establishing peak formation, potentially going higher, right? So it's just with simple indication allows us to determine wherever we lower or higher comparing previous range. Every single time frame we declare as the range. Single candle declares as the range, so it's easier to work when you look at the range slash high time frame candle on small time frame. So next setting, HLR, which is high and low of the range. It will declare the lines. Basically, if we add it, it's gonna gives us the range, high of the day, low of the day, so we know where we are comparing that range, right? So it gives you as well labels end of it, or not end of it, but basically at the current price action. So basically, if you look in something like this, you don't need to scroll back to see, okay, where is the high of the month? So we see high of the month is there, and you can see the high of the month, low of the month, monthlies, current monthly is developing range, right? Current weekly is developing range, current daily is developing range. That's basically same because it's Monday. So next setting will be OP, which is open price. So as you guys know, in AUTOMA we heavily applying open price, just because it's the open price which determines does your current range is developing as the up bar, as the down bar, right? So again, visually, because you're on 1 hour time frame, so on 1 hour time frame you completely with the ease can see, okay, where is my monthly low, where is my high of the month, where's the monthly open. So by just these 3 levels, what you can see, okay, that's monthly open, put the high and drop low, right? So I don't need to scroll back wherever, I already can see that just by the levels where I'm coming from, where I'm in the price action comparing the, so I can see already what's the monthly range development, right? And by the low of the month, high of the month labels, arrows, either it's reversal or continuation, I already know, okay, this month is coming from higher month, so this is this month lows, this month open, failed to go reach the previous month and fail back, right? So it's with ease allows you to read the context of the high time frame range and its development. so that's the open price, mid price, self-explanatory. It's basically current developing 50%. So if somebody who trades, you know, smart monies and likes the premium and discount, you can calculate the same thing as the, you know, buy low, sell high, just by using premium discount. Because once you study the range development, like here, like range development, which means like a new month opens, it puts low of the month, reclaims the 50%, what we want to see, how it flips bullish and goes higher, right? Like at this point you can see monthly's development. So at this point we have low of the month, we fail to break below 50% of the current range, right? So low of the month, high of the month, pullback, reclaim the level, go take out the current month's high. Time frame is irrelevant. This same thing happens on daily, weekly, 5 minutes, 10 minute, hourly, doesn't matter. It's the same principle. So it allows you to track, to see the, you know, effort versus result. respecting on the lower time frame price action with higher time frame range development. So that's current, you know, rolling midline for the specific range. Previous week, previous day, previous month. That instantly adds the previous range high low 50%. So we can see, so what it instantly gives us the again gives us the context, like what kind of context. So if again, let's say we looking at the hourly chart, so let's break the monthly, it's easier. So the monthly open, we can see half the month is already by the label lower than previous month's high, which we can see previous month's high is here. So if that was already down month, or you know, let's say just down range, down bar, what we are anticipating? We are anticipating that, you know, most highest probability that next range is gonna follow, right? But what's usually happens, we have a new, you know, we have a range, opens new bar, comes back, mitigates, reverse, mitigates, continue. So usually you want to see how, you know, high of the range, low range being in trend continuation, retested at 50%, right? Mitigated the previous range 50%. And what we have push up, we put high of the month lower than, we failed even to reach the 50% of the previous month, and we made low that is new, so it's just escalated. Basically we can see how previous month low, so you can see how we opened, we came out of the previous month's low, which instantly created peak formation low on monthly, peak formation low here on monthly, previous month's low, we back in the range, you can see it says previous month's low, so that's created peak formation on monthly. So what's the goal for reversal? To go reclaim the open price and go target the previous high, right? So before that we want to see 50% retested, peak formation monthly, reclaim of the monthly is open, perfect. So current range does what it's supposed to be doing if we are reversing. So we want to see reclaim 50%, go take previous range, taken out. All this is based just simply on fundamentals, how candles moves. Candles can move only in two directions. So with this rejection, with the news, we just fall underneath what? Underneath the previous range low. So that's what previous down bar, this confirms failing open price down bar, so we moving lower, continuing down trend. So the previous range high low 50% with current price open price and current development of low demand high demand allows us to see the context between two ranges and anticipation and find where is the sign of strength, sign of weakness. Sign of strength, peak formation low, that's first sign of strength for current month, reclaim of key levels like 50% open price. It shows us confirm of sign of strength that current month is pushing to take out previous range high, right? We put high of the month, and let's say we have like weekly peak formation high, that will be instantly sign of weakness. So with that first sign of weakness, an obstacle time frame for monthly is weekly, so sorry, with obstacle time frames weakness, we will have instantly context that, you know, current month fails to take prior range, rejecting at the, you know, 50%, let's say, with weakness of confirming of weekly flipping over bearish sign, and we are instantly targeting low of the month, you know, and continuation for the monthly. So ignore if I'm speaking monthly, it's the same, completely the same principle how the candles develop and rotates, because S3 concept, which is full candle rotation, sign of strength, confirm of the strength and targeting opposite range liquidity. Yeah, and it's the same thing across the any time frame. So that's regards the previous levels. So next is peak formations. So yeah, peak formations. So whenever we have a peak formation established on specific range, specific time frame, it's gonna highlight the previous range high with the current range high as the peak formation. So from all this price action, from all the ranges, we can see what we can see. We have a high of the day, high of the week, and that's previous week's high, previous day's high. So we just, what is this, GBP USD? So we had the peak formation high on high of the week, which this is golden template by our criteria, which is high of the week with obstacle timeframes, liquidity sweep. That's called golden template. So obviously what we want to see, that's sign of weakness for weekly, right? Sign of weakness for weekly, sign of weakness, yeah. So that would be stage 1. Obviously for confirmed going lower, we want to see what? We want to see the open price to fail. That will be, okay, if this is true high of the week, and that's sign of weakness, peak formation high, we want to see price to fail the previous fail the open price. So that will confirm us that we are developing down bar on the weekly and the daily, right? By price action, we can see we put the high, we failed, we came back retested, we came down, and we rejected from mid price of the weekly, current week's developing. But you know, it's ideally you want to see for daily is low. Okay, that's the low of the day. Low of the day coming out of what? Pretty much of mitigation of Friday's low. So yeah, anticipation at this stage is like whichever point of price you are, you just ask your question, okay, where we are coming from? We're coming from high of the week, weekly peak formation high. So that's sign of weakness for weekly. All over time frames you should have set a breakdown. So that's regards peak formations. So basically any time frame you apply, you can see this is 1 hour, and we have a peak formation on 1 hour right there, right? So if we enable, let's say 1 hour, it and go small time frames is gonna mark this sweep of the previous range, same as this. As soon as it fails out, as soon as it reclaims the level, it will show again same marking that, you know, that's peak formation. Our criteria for peak formation is strictly objective, which is previous range sweep and failure on multi-time frame perspective. So that's peak formation. Next is TRT, which is time rotations. It basically gives you the range separations, wherever is the, you know, previous range, where's the starts new range, where starts previous range for that specific time frame. So let's say here we can see that's the weekly start, that's the monthly start. So for case studies, it really helps to see the, you know, how the range develops and where it started, where it's end. These settings like fib, it basically gives the retracements from the previous range. So basically we're gonna have a retracement levels. This kind of gives you many levels, but basically you can see this is previous 618 kind of support, previous 786, previous 618. So basically what does it mean? It just automatically marks if that's the previous month, you know, and we have a deeper retracement, deeper pullback than 50%. We want to see, okay, maybe that 786, 618, 786 could be the high of the current month and your rejection, right? As that same principle as I was mentioned, when we have a range, we expect that from new candle ends open, it usually goes back and mitigates something in the previous range, right? So it could be 50% the most of the time, but it could be deeper, and then we just basically have level 618, 786 by fibs or retracements or whatever. stuff like that. Again, same thing, it's just you can apply that on any time frame you like. So that's general settings. So you have that. This will show whenever the last time it was updated. Actually, we are looking to update this tool, adding 30 minutes and as well. So 30 minutes something new we are adding on the most of the tools in coming updates. But this definitely is lacking 8-hour setting, because in most of the strategies for intraday we are utilizing 8-hour ranges, which is, you know, session ranges. So 8-hour peak formations, highs, lows is crucial for hive day, loaded day, and for hive day for daily golden templates. So else, okay, if I just switch off the majority, what I usually use, like nowadays I use more ULTIMA, which is, you know, more advanced tool, but same time you pretty much can see most of the stuff on this tool as well. But on this I will apply peak formations. Previous week I'm not really using the current 50% open price, not really using high-low lines, I'm just using labels, so I am aware where it is. So from, you know, look, if I just, for ease to see the settings, is something like this. Yeah, dailies, weeklies, monthlies, you know, high-low labels. Yeah, for, and don't need fib. So yeah, for most of the time I'm interested on hive the low the range of each time frame. I'm interested in open price because that's the, you know, time rotation. Previous week's range, that's crucial, and whenever peak formation is developed, it shows. So that's that. The next one's pre 4 hour. Actually that will be removed because it's kind of not gonna be needed when we add 8 hours. It's just basically determine the previous 4 hour range before London's open and New York's open, but that's, you know, ignore it, it's gonna be removed. Asia, sorry, oh yeah, that's full Asia range. I just give a crash, let's go 15 minutes. So basically that will be Asia's range, like full Asia's range, and that will be sessions. So let it load in. So yeah, it's basically Asia's range. When you add, it's gonna give you Asia's range and extend the high-low of that Asia's range. Again, it's when we add 8 hours, it's pretty much we're gonna replace, that's gonna be first 8 hour, and we can extend the 8 hours high-low. So that's actually something in the future we want to finish the specific model for 8-hour range rotations, which is working really hand in hand with the sessions. And, you know, specific models when it's creates the peak formations or when it mitigates, which for intraday is absolutely perfect. So, and this session, it's just gonna give you 3-hour box of Asia session, London session, New York session. And as well, the beauty is gonna forecast on the front, you know, before it's, as soon it starts, it's gonna forecast in the front. Like let's say price action was here, it's gonna already show the box on the front of the current high-low. So stuff like that. So if you want to see all the levels on the history, you just add days back. So you add days back, and let's say I want to see 30 days back. So you add days back 30, and whichever setting you have on is gonna add them on history. So you're gonna see we will have a dailies development. Okay, let's go one by one. So I will remove, actually let's stick with dailies because we're in 50 minutes. Just let me reload. So yeah, Now it shows all the settings which we enabled. So basically we can see what it's absolutely perfect for case studies, like beautiful. So it basically gives what it gives us the session, Asia, London, New York, all three. If we go back in settings, so it gives us session for each day. It gives us each day's open price, which will be dot line. If you go there, it should state somewhere. Maybe not, but basically dotted line is always open. Solid line will be high low, dashed line will be 50%, here on 50% will be what's called cross. That will be cross on the 50% on the back on the history. On the current 50% will be previous 50% will be dash line. What else we had? So it shows us open, shows this previous 50, and whenever if we have a peak formations, does it shows us peak formations? Is it? Let me check. So peak formations on history you will be able to see if you enable high-low range. So basically you add high-low range. So it will add the current range development, alright? So yeah, so if I remove the sessions, so remove the sessions. So now you will have what? So now you can see we have a high-low been tracked. Let's say this example like here. Beautiful, both of them. So we have as soon day starts, we start to track high-low. We have previous 50%, previous day's low, previous day's high. High is tracked. Soon we have that high of the day, we drop underneath, we have big formation, so it's gonna highlight. So in this case you can go through all the history you are available on your chart, and you can, why it stopped showing here, you simply go in history you have on your chart. So this way you can really practice the development of the single range, right? Because this is that is just daily time frame. So we can practice, understanding the development of the single range on every let's say on every day. You reading the tape regarding, let's say you on 50 minutes, but on 50 minutes you can see how its daily range developing, comparing previous range. So it instantly gives you the context, right? Instantly gives you previous range low, previous 50, previous high, and daily is open. So daily is open gives what? Gives you tells you the intentions, the current developing high, current low, the current low, current high, and open price. Tells you the current days developing, comparing with the previous, right? So if it does massive down bar, this day should move lower, right? If we are moving downtrend, this should move lower. So if you have previous days low and we're respecting to the dot, then not taking it out, and we reclaim the open price, what does it mean? It means we are bullish. It means this candle job, if this is the first developing up bar, first green day, developing first green day, so we want to see how it takes the previous range, right? Obviously because of the huge range we run out of time. If this was the first green day, because it's closed as the up bar, if that's the true first green day, or in this case if it doesn't breach the low, it's just the inside day. So we again know where is the previous day's low, previous day's high, previous day's low, 50%, and low doesn't even breach the 50%. What does mean? We have aggressive move, we come back, mitigate, fucking go higher, right? So simple as that. So this really helps you to see the previous range sweeps, peak formations, open price, the range developments, and so on and so on. It's super useful if you really like to do case studies like weeklies, like weeklies profile, how the week develops. So let's say I will add the high-low range and open price of the week and previous peak formations, previous open, yeah, something like that. So I'm gonna show you the example. So what is the intention? So let's say you have your weekly range, so we can see how the weekly range developed. Any, doesn't matter. So we have this historical weeklies range, open, low, reclaim, open price, starting to go higher, right? Which you can see accumulation, manipulation, distribution. So with the daily, and we'd say previous day peak formation, you don't need, and just enabling every single day development, you can clearly see, let's let it load it in. So now we have a weekly's development. We can see where is the weekly's low, weekly's open price, weekly's high, and every single day you can see how every single day developed, right? How every single day developed. So, and another thing you want to see, it's weekly's TRT. So this way you can go basically do case studies for every single week and seeing how it's developed, comparing how single days develop the weekly's range. See, we have weekly separator, so we have a weekly's range and how single days develop weekly's range. You know, we have peak formation right there. We had a peak formation right there. We get multi-time order flow. Beautiful. So sign of weakness, you know, following. And that's not multi-time order, that's high of the week, so that's high of the day. It's just, you know, trend continuation of high of the range. So super useful for case studying ranges and its development. So that's regards the history. You can add daily VWAP. Daily VWAP is a volume weighted average price, so it's basically tracks the not sure it's not there. Actually, I need to check something. Alright, maybe it's not there. Okay, I need to fix that. So yeah, basically daily VWAP is that, you know, we have a average volume price level on the chart. That setting just daylight saving time on off. Whenever clocks are switched forward or backward, you can switch it on off. So let's remove daily back. So then actually leave that. So then we have a multi-time from order flow, which will basically, if we add daily, weekly, monthly again, multi-time from order flow is basically when, if previous range established low of the week, then current low of the day respects the, let's say this low of the week respects the previous week's, this low of the day respects previous day established low of the week. It will be multi-time from order flow. So same case, last week we established low of the month. This week low of the week respects previous week's low, because low of the previous week's low established low of the month. So whenever plot all, it's gonna basically shows all the last multi-time from order flows. When you press active, whichever is active, let's say this will be removed because it's been taken out, right? So it wasn't active anymore. Same as here, this week's high respected previous week's high, but previous week high came from significant high of the range, which is high of the month. So it's just visually shows you the lines wherever we establishing high range multi-time from order flow, and it works across any time frame. If you enable quarterly, yearly, maybe you will have you will have this month, maybe previous month establish high of the quarter, so you will have a quarterly, previous ranges respecting quarterly, previous week respecting monthly, and so on. So it's multi-time from order flow basically. Like here, this hourly respects previous hour establish 4 hour low. Same as this, low of the 4 hour respects previous 4 hour, which established low of the month, and so on. So it's straightforward. That's just that. The next one, let's cover the table. So table 1, table 2. So table 1, table 2. Table 1 will show high of the range, multi-time frame, high of the range, low of the range, and when was it established. So previous 50 minutes we didn't establish nothing. Previous hour we established, we can see high of the 4, low of the 4. Previous week we established low of the year. So it's well low of the month, but it's gonna show the highest low of the range, high of the range which been established. So previous week we established low year, low month, low quarter, low of the month, right? Previous month, previous quarter we established high of the year, high of the quarter. So it's useful for multi-time from order flow, because every single day you're gonna ask, did yesterday we establish any significant high or low? Every week you can ask, did last week we establish any significant high or low, and so on, so on. You can ask every hour, did last hour we establish any significant high or low? If so, it's gonna come up in the table, and you will know, okay, last week, last week, last day, last 4 hour, last hour established significant high or low. And then you can ask, okay, where is that high or low is coming from? Is it coming from peak formations? So this table will show you peak formation, peak formation high, peak formation low. So we can see on 4 hour we have a peak formation low at the moment, and peak formation, peak formations is similar. Peak formations we have trend reversal peak formations and trend continuation peak formations. We can see high of the we have daily peak formation high, and we have weekly peak formation high. We have quarterly peak formation low, we have weekly peak formation high, daily peak formation high, 4 hour peak formation low. So whichever point you are, you know, okay, which side been already swept, like which side been swept by the peak formations, and what type peak formation is that, because trend continuation is higher probability, right? In members education section, you can go through education section regarding peak formations, and you can see examples and breakdowns, which ones are trend continuation, which are trend reversal peak formations. So that's regards the table 1, table 2, multi-time from order flow. Let's remove, just leave the daily, previous day, peak formations. Then next one is this volume. So when you click the volume, you have option only price action volume or all volume. If you add price action volume, it's gonna indicate on the bottom the volume spikes and volume spike reversals for price action. Price action candles will be, as you can see, engulfment, spin bars. Actually, I will cover instantly. We have this setting right there, bar coloring. So if you enable, it's gonna remove the coloring. As you can see, it's removed. if you add, that's basically adds us, you know, significant price action on the, you know, on the chart. It basically indicates us engulfments, you know, blue, black, it will be bullish engulfments, bearish engulfments, pin bars, bearish pin bars, bullish pin bars, you know, bullish pin bars, bearish pin bars, and some different types, you know, bullish pin, like combination between pin bar and engulfment, and so on and so on. And as well, you can add inside bars. So it's basically gonna color yellow ones whenever they are inside bars. And so when we add volume and choose the setting price action, it's gonna basically mark on the bottom here whenever we had a significant increase in the average volume, like basically volume spike. Whenever we have volume spike, as we can see, it will indicate in multiple colors. So it shows twice, 3 times, or 5 times. So its setting is all, as you can see, 2, 3, 5. So now it's gonna show volume spike on, you know, all price action candles. If you change, let's say, times 3, so now it's gonna only show the lower triangles wherever we have a red color or higher. So basically we can see this, it's so 5 times will be purple, 3 times average volume will be red, blue will be twice, and green will be just average volume. So we can see in this bar we had 5 times volume spike, right? We can see here on this low we had a 3 times volume spike. We had 3 times volume spike down, 3 times volume spike up. and then if you click the reversal, let's go back like all. So and this plus, actually let's load in, and like the triangles indicates volume spike, and the plus sign on the top, like red one, will indicate that this bar has more volume than last 10 up bars, and this will indicate this up bars, like green plus means, you know, up bar volume has more volume than last 10 down bars, and lower volume indication means the spikes. Green is like, you know, more than average volume spike, and the rest of the color coding and so on. And when we add the volume reversal and add this to all, it's gonna gives us the indications whenever we had a volume spike reversal, by meaning we had in both directions. Actually, maybe let me check what settings I need. Oh, I think it doesn't work on all. I think it works on, let's say, 2. I think it works when we have a filtered out. Let me check. Yep. So now we filtered out only show volume on you know, twice as average. So over here we can see what we have, you know, aggressive volume spike down, spike up. So it means, you know, we had by the price action, looking what by the price action we can see, you know, we had aggressive move down, aggressive up. So it's mean all this volume being absorbed for reversal, right? Most of the times happens on the whenever we have news, or whenever we have like volatile session. So it's gonna show volume coming in, and we want to see volume. Basically what you want to see volume spike one side, and one side volume spike another side. So it basically indicates volume spike reversals. On Forex it doesn't, you know, looks as neat as the, you know, volume reversals at the extreme highs lows. At crypto looks even better, but there are, like example here on this example, you know, low of the day volume spike reversal, high of the day volume spike reversal. That's obviously news. Like here as well, again news, but we have nice highlights basically whenever we have a volume spike reversals, right? can see here we had as well. You can see we had a triple volume spike up. You look up by the candle, that's bearish pin bar, right? So we absorbed, like literally you can see this aggressive volume spike bullish being absorbed and then reversed in opposite direction. So that's regards the volume and the reversal. So that's pretty much covers the all settings on the multi-time frame key levels. This indicator is available via leagues tier, leagues indicator list. Yeah, so if there is no more questions, I will wrap it up this session, and thanks for joining, and bye bye to the next one.